Hey, what's up, SilverTraderFM subscribers and viewers? I'm inside a Starbucks, so a little bit of cheesy music, background, Java making going on. So, ignore the noise in the back. Just doing a quick overview of the markets and our precious metals. Today's August 22nd, Monday, about 9:30 a.m. Pacific. So, getting right into it. There seems to be a knee-jerk reaction to Libya, and the rebels are gaining strength, liberating Libya, and we are gaining strength liberating its oil. So we'll see how that turns out, see if there's a trial or execution of Gaddafi, poor guy. So we'll see how that goes. So getting into the S&P 500 index. If you were in the S&P 500 index, say SSO, since the beginning of the year, you would be down about negative 10%. However, if you're buying PSLV or the physical gold, you'll be up 44 or 33% with those two. And if you're holding it longer term, 1 year from last summer, then you would see about 5% on SSO, for example, and you'll be up about 102% in physical silver and about 42% in physical gold. Much steadier climb. So that just shows you that this whole S&P scam of quantitative easing is definitely not working. So other news: stocks rise in anticipation of Federal Reserve meeting. So basically, the Bernanke is going to have a meeting this coming Friday, as he did last year, where he introduced or hinted at the QE2 program, as they call it here. However, this time he may give a little hint of QE3 if he's pressured by Obama and cronies to start executing it, because the market's going down too low. We'll see how we end this week. Maybe if we could do another 10% down on the S&P, he may pull the trigger. So at that point, we may have to go long in some of our trades and get off our shorts. Early mortgage delinquencies rise to highest in year as U.S. economy slows. So basically, a lot of people that usually pay their loans are overdue by about payment. So they're saying overdue by 30 days. And that's the highest on the people that usually pay their loans on time. So we're seeing the beginning of a recession, people. Beware. Getting into the metals, you see gold up 31.9, silver up a buck, about 2.5%. Platinum up 24, copper down, palladium up 7. And the thing about it, hearing, some people say, "Oh, gold is getting too parabolic. I'm starting to sell my positions." I'm like thinking, all right, so gold goes up $30, $40, 30, 40 points in a day, right? How much is that? About 1.5 to 2%. That's hardly a parabolic move, if you ask me, right? So at times it seems parabolic because gold has been going sideways for most of the beginning of this year, right? But recently, it's been going up a steady 1.5 to 2% almost every day, if not every other day. So for us to reach 1900 already as of last night, we're off by 2 at 1898. It's hardly parabolic to me. So it's a steady rise up. So we'll see if the CME overreacts and starts pulling its margin card on us. As expected, silver is up on top, as well as gold. On the complete opposite, we have lumber and orange juice struggling to keep pace. Getting into the charts, this is the SPX, or the S&P 500. We broke major support, and we are truly in this down channel now, as you can see. Hitting our head up here, finding somewhat of a bottom for now, hitting our head again on the top of the channel, and continuing our downward spiral. We seem to be finding major support at this 1120 level. Expect us to bounce up a little bit if we can, maybe hit the top of this, or even top of here, 1202 again. then continue our way down. So pick up those ultra shorts as I've recommended if you're willing to put some risk on your table and hedge against this downward spiral. Well, it's not really risk, right? It's really hedging against a downward trend. So putting on some SDS, FAZ, TZA doesn't sound too bad. Every time we get a little pump up, load up on those suckers and write it down, or since it's doing the opposite, you'll be writing it up. Let's take a look at gold. Gold is definitely looking good, looking very powerful. So watching gold, right? We broke out on the Jim Sinclair 1764 as of last Monday, and on Tuesday we were right on top of that. Kept climbing up. 1, 2, 3, 4, 5 days of bullish activity on gold. So I would expect us to hit here, and as we are now, finding some resistance. It'll be nice if we could retrace back a little bit to the support line, maybe back to 1820, and do the zigzag move. Otherwise, if we just keep going up like this, who knows? Maybe Jim Sinclair was really right that it should go parabolic from here. But it'll be nice to see a little bit pull back, let it relax, then continue its ride up. Do like a little bit of a roller coaster movement up and down. You know, stay within this upper yellow bullish channel, super bullish channel, and we could continue our rise above 1900. So I would expect some resistance at 1900. But you never know. I mean, we just busted through this. We bammed through this 1800 level with force. We just tested it twice, 3 times, and blasted through it. So we can potentially do the same thing up here and create a third bullish channel up here for gold. But we shall see. I mean, the activities of the Bernanke this coming Friday could potentially pull gold even higher once he announces QE3, if he has the guts to do it this early. But he's gonna have to come out with it fast and furious, because he's gonna have to introduce it as if it's twice the size of QE2, and there's no doubt in anyone's mind that, you know, that kind of stimulus would lead to a downturn as it's doing right now. So we'll see what he says as far as QE 2.5 or QE3. It probably has to be like a QE 3.5 for it to really move all the indexes. Let's check out silver. So silver has broken out big time of the symmetrical triangle, right? Broke out as of last week, say Tuesday, Wednesday, Thursday, Friday. We really blasted through it. Friday was our biggest gain of about 5.5%, and now we should be able to find some support on this 41.8 area, and we should continue our move upward. Silver was lagging behind, but we shall see it continue going upward. I expect it to hit some resistance over here at the 45.7 area if we can continue our move this week. Let's look at the trade. So the trades were looking nice. So this was early Sunday morning, Asia time. Silver is making new highs and made another new high over here at 44.09. Gold was finding new highs early morning, and it found its new high over here of 1898. I would expect silver to find major support at 42.05 on this hourly, and gold to find some major support on this 1879 area. Tested it 1, 2, 3, 4, 5, 6 times, and we broke out of it. Fell through it, tested it again, broke out. Hopefully we can find some support in this 1880 area. But we'll see what the CME does. If they raise up margin hikes, that could pull us back severely. So keep your stops on if you're trading, day trading, or doing some swing trading, just in case the CME pulls out their card, and just in case the Bernanke, announces QE3 at the end of the week. That could severely turn the markets to the upside if you're on your shorting routine with the TZA, SDS, and FAZs. Be careful with those. Come Thursday or Friday, it's better to be out of those and just listen to the news and decide which way to go on the markets once he opens his mouth. So, stay safe, guys. Stay long, gold and silver. Jump in on the pullbacks. Keep stacking the physical. I'm SilverTraderFM, and I'm out for now. Take care, guys.